Hi, my name is Layla Andrews and welcome to my weekly analysis for the week commencing the 1st of October 2017. I'm actually bringing this video to you on the 2nd of October because I had a technical hitch with my usual MT4 platform. So today we're going to be using TradingView and I'm going to be looking at dollar yen and Aussie dollar. So let's start with dollar yen on the monthly chart, and the first thing I want to do is talk to you a little bit about the context of where we are in comparison to where we've come from. So just as a quick recap, we've had a rather strong uptrend in recent time. I say recent time, it was beginning back in 2013, and we've had a rather deep pullback since then that found support at the 100 round level, and from that point on we have had a very powerful momentum move upwards. So to describe momentum, first of all, it's to do with the size of the bars and the way in which they close and open. So in this particular case, that means full-bodied bars, and they're pretty large, and they tend to move. In a pretty together as a group. They tend to move in a pretty vertical sort of direction. So there's a very steep angle here, and this usually implies momentum. The reason why this is important is that we have to compare where we've come from in terms of this momentum move to what's been currently going on recently, which will be much more obvious on the weekly chart because you'll be able to see some of the cycles. But as you can see, this is a rather different looking set of bars compared to what we've had here, which is bars that tend to open and close, and not when I say open and close, they open and close at one end and continue in their directional move. There's not a lot of overlap. Whereas we look at this particular section of the chart and there is a lot of overlapping bars, as if the market is finding it hard to get a sense of direction, i.e. every time it makes one move one way, it gets pressed down, and every time it moves down, it gets pushed back up. So there's a lot of pulling and sort of pushing and pulling on this particular market at the moment, and I think when we look at the weekly you'll see a bit more about what I mean. But first of all, I just want to talk to you about the current circumstances of the September price action, which is this large green bar here. And the reason why this is important is because I think, as you can see, this is significantly larger in terms of not just its size, but it's got a bigger body, and it's also the height and the high and the low pretty much fill up most of this range to its left. So this is a bar that has more buying strength in it right now, and that is why that's why it's important to us, because it also shows us that this level here at 108, including the 50 EMA, which it's currently sitting on, this pairing of factors, the EMA and the 108 level, have provided a strong level of support. This is a well-defended point, and it means that every time that this market tried to sell lower, because that's basically how it started, it's been defended and pushed back up. So this bar here gives some indication that for the current period, it means that the buyers slightly have the edge on the sellers. And that's why looking at this particular piece of price action is important in terms of giving us a read about what may be coming in terms of where the market might be trying to head to. If I move down to the weekly time frame, you can see I need to come out of this and go to another time frame. If I come down to the weekly, you'll see that it actually shows us where are we? There. Actually shows us the current circumstances of where we are. I just want to go back into full screen and lose that there. So weekly wise, this is much more detailed in terms of the cycles, which was the part that I wanted to explain. So we've just come, as I say, from the support level at around about the 100 round number just here, and as I was describing, we've had a momentum move, and generally also, just to describe momentum, it's usually made up all of one color as well, so that's also something to remember. But the main thing to remember is the size of the bars and the fact that there's very little in terms of overlap, and they are very strong in their direction. This is an incredibly steep angle. It's verging on vertical, which is about as vertical as you can get in terms of a market, particularly a rising market, as well as markets that sell off tend to be extremely steep once they get going. So the reason why this is important is because I want you to look at all of this price action that it has taken in order to get from this point here to about halfway down all of this move here. all of this time, all of this effort that has been involved in trying to cycle this market lower just to get basically about halfway down to the bottom of where this market started to rise. So that means that there's a bit of a fight going on. We've almost got, in some respects, equal numbers of buyers and sellers stepping into the market at each point that they feel is their turn to take over the market. And this is why we've got these quite sort of equal looking cycles, especially in this middle part just here. Literally, the buyers have it on one side, and then the sellers take over. The buyers take over, and then the sellers take over. So this is kind of like a toing and froing of the market, if you want. But the reason why this is important is because looking at the monthly chart where we have the 50 EMA coupled on this 108 level, we then move to the weekly where we have the 200 EMA. So there's definitely some major EMA support here, which is on the whole being rather well respected. And the reason why this is important is because effectively we've had what, even though we are making, and this is where it becomes a little bit complicated, even though we're making lower highs through here, all the way through here, and lower lows, this low here being slightly lower than this one, even though we are making lower lows and lower highs, this market, every time it should actually fall over, doesn't. It doesn't fall over. It actually keeps being well defended at this level here at 108. And that is beginning to pay off, as shown by the September bar that we've just looked at. And we can obviously see this in some of the detail here. Now, this current set of green bars that we've got are actually really losing strength, as they're, funnily enough, coming into what I've defined as a kind of trend line. I'm not including this part here because it's mostly about this section of the chart here where these highs are getting lower and lower. So we've come into this trend line level, which is in some respects a good place for the market to bounce. Now, the way that I am wanting to read this, which is it's not what I would call guesswork, but it's my proposal of what I think might be coming next. So if this low here and this low here are going to play out like I think they will, which is that they're effectively like a double bottom that have on this being the second occasion, on two occasions have tested this support zone of the 50 EMA on the monthly, the 200 EMA on the weekly, and the 108 level. If this is a double bottom and the price action on the September bar really is the bullish bar that I think may produce the strength that is needed in order for this market to begin climbing higher again, based on the fact that we've had a momentum move that traveled a long distance with a few number of bars that was then followed by a rather weak effort of trying to sell off as a counter move to this momentum move upwards. This counter move really didn't get going anywhere. It's actually a bit of a mess, but overall it's got itself into a bit of a sort of slightly slanted down range, which means that what it was trying to do, i.e. sell off, it can't do. So my idea is that if it can't sell off, then it's looking more like it's looking more to the buyer's side. I know this is possibly a little bit complex, but the idea being that because it can't do one thing, it's going to do the opposite. And this is my argument for why we are where we are, where I think might be the beginning of a process which I'm hoping is going to give us extra confirmation that we may well be in the process of perhaps turning from being what is lower highs and lower lows to now making higher lows and higher highs. So the way that this may happen is that we come into this trend line, which is effectively giving some resistance for the time being. This would theoretically push price down a bit lower, coming into one of two places. Or first one I'm thinking is a combination of this 10 EMA here on the weekly chart and coupled with the 111 level, which is sort of like a rotation point where price likes to use it as both support and as resistance. So we've been here in the past, and it's reasonably well respected in terms of event point. It's not what I call a rock hard level where the market's just going to turn, but it does use it. So theoretically we could have a little bit of a sell-off back down into the 10 EMA and possibly down to the 111 area. Now if that doesn't quite hold price up, we may see that it continues to come lower and may in fact be coming down to test the 50 Fibonacci level, which if I extend this out, you'll see this is the 50 fib here. So that would give us the 50% retracement down to here, effectively possibly even joining with this pink diagonal support line, which could also be around about the 109.50 area. It's a bit difficult at this point to give exactly the most finite sort of numbers, but approximately those are the two areas where I see price providing a bit of support. So the first one being the 111 area, and the next one being the 110 to 109.50 area, also coupled with the 50% fib, which gives us a possible area where price could pull into, find an opportunity to create a higher low, and then that might give us the impetus to make the next leg up, taking out this high. Now if we take out this high at approximately, well, it's not even approximately, but if we take out this high at 113, we then may well see price trying to turn from being in a sort of rather kind of slow moving downtrend to being something which is actually trying to continue this momentum move up by continuing to the upside. As to where it gets to, well, there's levels on the way, and we will very likely be revisiting this chart at a later date to talk about that. But certainly we need to take out the high at basically 113.25, and then we may well see price heading into the 115 level. So that's effectively what might happen. But what I am describing could well take some time to pan out. We might need to see maybe 1 or 2 weeks of selling off. Then we may need to see a few, maybe 1 or 2 weeks of trying to get past this high before we get to the 115 area. So we are looking quite far ahead into the market, but that's my idea, that we'd need to sell off, create a higher low, and that might well give us the impetus to create the next leg up of this particular move just here, based on the fact that the September bar is looking pretty bullish compared to what's come before it. Okay, so that's how I'm seeing dollar yen. Let's now have a look at Aussie dollar, and that's this one here. And I'll just make this chart larger. So with this one, we also need to start with a monthly chart, because that's where I like to start all of my analysis. Sorry for this slow moving charts, but we'll get there in the end. Okay, so just in terms of context, because you really do need to know your environment, as it were. In terms of context, we've been in a good downtrend, and that means that we've been making lower highs and lower lows, and obviously this point here was a really strong sell-off, followed by a pullback, another lower high, and followed by another low. Since we reached this point here at basically 0.6820, we've effectively been doing the reverse. We've been making higher lows. Now, price was making higher lows into basically a flat level of resistance. Now, if that's happening, that generally means that the market has an intention to break through whatever it is that is in its way, whether that's an EMA or whether it's a price level. So in this particular instance, because this market was making higher lows, this is the low, this is a higher low, and this is the next higher low, all through here it kept testing. But each time that it tried to sell off, it couldn't sell off lower than its previous sell-off. So this means that overall, buyers were the bias was more towards the buyer's side. And on the point where the market actually managed to break through the resistance level, which was 0.77, and to some extent 0.740, the point from here was the impetus that gave the bar was given enough impetus to push through what had been the resistance at the 20 EMA level, pushing into the 50 and the 200 as the next level of resistance. So that wasn't the best explanation I've ever given, but basically what I'm saying is, if something has been contained in a very, very confined space, when it bursts out, it tends to have a fair amount of strength behind it. And the best way that we could really see this moving was almost magnetically towards the 200 EMA and the 50 EMA, which is basically what happened. And it also happened to coincide very nicely with the 0800 round level, of course, which is both psychological and obviously the next set of numbers, if you want, from where we've come from. So, and by next set of numbers, what I mean is that we've been in the sevens. So to go into the eights would be the next batch of numbers, if you like. So that was always going to be a bit of a psychological zone. So it's definitely a strong resistance point here. We've got the 50, we've got the 200, and we've got the 0800 level, which I'm actually going to put in because it should be there. So that's that one there. And let me just change these numbers to their exact. There we go. So to see price burst through here and then come into contact with this number of factors, to see a sell-off at this point really is no big surprise, but of course the way in which it sells off is what we would be trying to read on the lower time frames. And the reason why that's important is because it's not necessarily just going to roll over, and as you can see, we have a higher high here. So this market did push down, but then it attempted to actually move higher, but failed, and this will show up more clearly on the lower time frames. But for this particular instance, this is the bar that we ended up with for September, and it's got fairly bearish implications for now. However, it's quite close to recent support at 7740 and obviously the 0.77 area. So the likelihood of it being able to sell very deeply back into this zone, it's not that it's unlikely, but it's more likely to find a well-defended support level here than it is likely to keep selling down to the trend line. I'm not saying that's not possible, but this has been a really key area for the market in terms of resistance, and therefore it would become a key area in terms of support. Not only that, but it also happens to tie in very nicely with the 10 EMA on the monthly chart. So we're getting very close to this area now as it happens, and it would be for me my first estimation of where this market is trying to sell into. So let's have a look at the weekly chart and see where that takes us. Hang on, sorry. Let me just get back to where we were. So this is now the weekly chart on Aussie dollar, and interestingly enough, we're in obviously this is a bit more detail, but interestingly enough, just like dollar yen, we've got dollar yen in terms of support. In terms of resistance on Aussie dollar, we have got now a 200 EMA on the weekly. So whereas before we had a 200 and a 50 on the monthly, we now also have a 200 on the weekly alongside this round level of 0800. On this one, of course, we did get a bit of a higher high, but it never really got going as far as it should. And my reasoning behind this is that this was a strong move followed by a fairly shallow pullback, and this tends to imply that this market will try and attack this resistance level, which it did do. And theoretically, this market should have moved further on than it did. It didn't actually manage to get much further than this high here, so there's not a great deal of distance in terms of height between these two high points. So that implies that there wasn't really enough buying strength to really move this market on, and that would be perceived in some ways as a sign of weakness. So do you remember the monthly bar that we just looked at in terms of it was a bearish bar with a pretty long tail? All this is the result of that. So that's why we'd have to look at this as possibly being an opportunity for the market to sell off a little bit deeper than the previous sell-off, because we've now had our first attempt. This is our second attempt to break through, which, although it was higher, was actually the confirmation of the weakness of the market, because we didn't buy as much as we should have done. So that in effect will then produce the opposite result. If this is weak, therefore we should be selling. So the market sold off reasonably comfortably, took out the recent support level here, which was the 80 EMA on the weekly, and sold into the 20 EMA on the weekly, which is also coupled with the 078 round number as well. So this is an obvious place for price to be hanging around and pausing, if you like. So this in itself could be a point where we see a little bit of a push up into the resistance level, which is at 07880. Let me just make sure that that is exactly what I think it is. Sorry, 07875. We could see a little bit of a push up of price into here, effectively making a lower high and then going down for the next attempt down to the 077 area. Don't really, as I said, I don't really see price exceeding these support levels at 07740 and 077, the round number. Not only that, because we could potentially, if we do end up selling off lower, end up finding support at the 50 EMA. With this particular currency pair, I actually want to go and have a look at the daily as well, and that is here. So daily wise, we've been finding a little bit of support, and if we've been finding a little bit of support at this 078 level, then theoretically we could find ourselves pushing through to, as I say, the upside, where we may well be connecting with the 10 EMA on the daily, and also the 07875 level, which is this pink line here. If we do find a little bit of resistance here, then effectively, as I say, we will then see our lower high, which would then potentially be the point at which we've got a high, a lower high, another lower high, pushing into resistance here in order to give us the sell-off that we were just talking about. And again, also on the daily, we have the 200 EMA, where the 50 EMA is on the weekly. So there's definitely some support in this zone. And for the time being, what we have is a market which looks like it wants to go lower, but it might need to have a pullback before it does that. So that's the explanation in summary of what we're looking at. As I say, support at 078, push up into 7875, potentially connect with some of these EMAs. It might be the 8 in this case, because I am using different charting software. I realize that normally I use the 10, but this is actually the 8. But they're so close in terms of number, they won't look very much different. This will be very slightly more sensitive to price movements, so it will follow price a tiny bit closer than the 10, but ultimately it's more or less the same. And if we were looking at a 10, it would be more or less in the same place. But just to get back to what I was saying, potentially a move back into, as I say, this resistance level in order to give us an opportunity to sell back down lower. In terms of whether price might want to get higher, in order to, again, as I say, make a lower high, 079 could well be an area which might connect us with the 20 EMA as well. So there's 2 points, but really at the moment, excuse me, I see this market in attempting to give us a bit of a pullback before possibly selling off. Okay, that's everything I want to say about those two currency pairs. Thank you very much for listening, and I look forward to speaking to you again. Bye bye.